Let's ask Craig Johnson, Chief Market Technician at Piper Sandler. Craig, it's great to have you on. What are the charts showing us about the SPX here?
Thanks, Morgan. What the charts are showing us about the SPX is that the bull market is still intact and the Santa Claus rally seems to be on track at this point in time. Keep in mind that the Santa Claus rally is usually the last, 5 trading days of the year, first 2 trading days of the new year. And at this point in time, we're still in a setup for a positive return for the Santa Claus rally. We've had 39 new highs. We didn't quite make the 40th today's trading session, but there's still more room for this market to continue to keep working from the upside. But Morgan, I got to tell you, it's probably a bull market with a lowercase b, not a capital B, as you head into 2026.
Huh. Okay. Dr. Copper, what are you seeing in that chart right now?
Chart of copper looks fantastic, and out of all the metals, we think that copper is more attractive setup on the charts. We're in this nice upward trending channel. We're not overextended. The momentum is still in check at this point in time, and it looks like copper is ready to have another leg higher. In fact, when you look at the charts in here, Morgan, there could be another, 6-7% higher just to get to the upper end of that trading range for copper, and that is, again, our favorite metal for 2026.
How about gold? Because I know you're also tracking the gold miners ETF here, and we've had a crazy year for gold and silver also.
Gold, silver has been fantastic. In fact, Morgan, the basic materials sector has actually been the best performing sector year to date. And a lot of that has been driven by gold. It's been driven by silver. And we look at the chart of the GDX, there's about 17% more upside to reach sort of a measured objective there. So gold can likely continue to keep working. It is kind of odd, Morgan, to have gold working, equity markets working. Usually one tends to be more defensive, and you don't usually see gold and equities typically moving at the same point in time. But right now, they are, and it looks constructive.
Interesting. How much of that also hinges on the fact that the dollar has weakened against other major currencies? Dollar index is, I think, on pace for its worst year since 2017.
That is indeed the case. And I think it's also just central governments around the world choosing to want to buy gold, buy silver versus owning treasuries.
Biotech, what do you think?
Biotech is still another fantastic area. If we're going to get a couple rate cuts in 2026, biotech will likely continue to keep working. If you just pull up the chart of the XBI, you can see that it's very nice setup on the XBI. It's broken out the new highs. Again, it looks like there could be a whole nother leg higher here for the XBI. Drilling down into some of the constituents inside of that index, you can look at Exelixis, you can look at Regeneron, Travera. These are all names that all look constructive on the charts below the surface, and XBI is probably going to be a surprise for a lot of investors next year. That could be the new beta trade next year. As a lot of people are already into the AI trade, biotech might be a new carry-on trade for a lot of beta momentum investors.